Good afternoon. It is Tuesday, November 27th, just a bit before 1:30 p.m. My name is StockDarts, and in today's video we're going to take a look at an options trade on Apple. This is going to be very similar to the trade we took on Amazon last week, which has worked out very well for us, and is the final part of a free preview series I'm having on the new tier of subscription that I'm adding to my Patreon.com page. For those of you that maybe aren't aware, I have a page on patreon.com/StockDarts, where I post content on a daily basis, typically 3, 4, 5 times a week. And some of these are free, some of them are tier-based. You can see the lowest tier is only $8. The options tier is going to be $88, and it's going to give you access to a lot of different and unique trade ideas that you won't find anywhere else. Obviously, you'll get access to my earnings trades, which have been very successful throughout the years. You also get access to non-directional plays or semi-directional plays that are based more off of volatility and premium in options, rather than just saying, oh, go ahead and buy calls in this name or buy buy puts, which in the end is really just a cop-out for a lot of traders, because more often than not, if you're just buying calls or puts, you're better off just trading the stock with shares. But there are a lot of ways of taking advantage of the premium in options, and with that subscription, you'll get a head up on the competition and learn some new techniques that can help you further your trading, particularly in times like this in the market where the directional opportunities are really not that great, and you need other ways to try to extract profit from the markets. So if you are interested in that, go ahead and visit us at patreon.com and take a look at it. You can look at all the content we've had over the last couple of months. It's been pretty successful since we launched, and I'm hoping to grow it in the near future. Now, that being said, let's go ahead and take a look at Apple and what we want to do with Apple today. Now, as I mentioned, the trade we took last week on Amazon was a calendar spread that we ultimately took with the intention of turning it into a bullish play, and that's going to be the same case with Apple. There's been a lot of volatility coming in, overnight volatility in particular, based off of some comments off of our president. But Apple's holding steady and has actually come down to a pretty significant level of support if we look at it in a longer term chart, right? We go ahead and take a look at the weekly chart. You can see where we are, and we're right smack in the middle of a base that we spent a good portion of the end of 2017 and the beginning of this year, and are starting to print some support. Now, do we have full-fledged support and are ready to bounce? Maybe, maybe not. But what I suspect is going to happen is that we spend a little bit of time here for the rest of this week and then maybe drift upwards into the holidays. And so the play that we're looking at taking is a calendar spread where we want to go ahead and take advantage of the likely evaporation of the premium for this week, but maybe the premium for next week holds a little bit as it starts to make its way up into next week. So what we want to do here is come over. I'm going to go ahead and redo the play. And the way calendar spread works is you spread the options through time rather than through direction, right? So what we're going to do is look at 2 different weeks. We're going to look at this week's expiry, and we're going to look at next week's expiry. And what we want to do is sell the options from this week. We want to go out of the money with calls, because in the end we want to hold the call for next week. So what we're going to do here is look at the 170, 750, 180. In this case, I think we're going to go ahead with the 170, 750. We're going to go ahead and sell. The mid here is 76 cents. And then we're going to go to next week, and we're going to buy. Same exact strike, right? So 170, 750. I'm going to go ahead and buy this. And the mid here is probably 225, 226. And what we have here is a calendar spread. Voila, right? And it's a little bit out of the money. And basically, you profit as long as Apple stays within a range, right? You don't want it to go down too far. In this case right now, it's estimated around 173. Or you don't want it to go up too much either, or at least not quickly, because you want the options from this week to expire worthless. So you want this 177.50 call that we sold this week to expire worthless, and you want the call from next week to hold as much value as possible. Now, if things work out exactly as planned, we'll lose all 76 cents and gain that premium, and we'll hopefully lose maybe 20, 30, 40 cents of premium on the call side, and you end up making a decent amount on the spread. Now, the way a play like this works is typically you just close it out on Friday and keep the difference in the premiums. However, what we want to do this time is hold the call into next week and either turn that into a call spread by selling an out-of-the-money call, say the 180, next week or later this week when it's hopefully gone up in price if Apple rises, in which case you can end up with a free play looking for even further upside, or you can just hold the call depending on how comfortable you feel with the play. And in either case, what you're looking for again is we want it to stay static this week and just not really go up above 177.50, but with the added caveat that if we're happy and we feel comfortable with it, then we'll close out only half of the trade and we'll hold the other half into the rest of the week. Now, this is a little bit more of an advanced strategy, and if any of you guys have questions regarding this, whether it be in how to enter the trade or how to adjust it or how to close it, feel free to message me on Twitter, message me by email, or join us at our Discord chat, and I'd be more than happy to walk you through how to go ahead and play the rest of this. But that's the idea for this week. That's the idea that I'm having for Apple. I think it could work out. Now, of course, there's always potential for downside. This is a little bit of a cheaper spread, so I'm more likely to be lenient with it if we get a gap down tomorrow and go a little bit below our price. But typically in this sort of scenario, you want to close it if you get a gap down below the action from the last few days, and try to salvage whatever you have of the play. But again, this is not a very expensive play, and a lot of times what happens on those gap downs is it kind of runs right back up, and you end up not really losing much because of the way the premium works. So it's a play you could be a little bit lenient on, but if you're not comfortable with it, you can always close it for half rather than letting the entire amount expire worthless. Again, what we have at risk right now is approximately $1.50, right? 226 minus 176. Well, it's exactly $1.50, and that's the most you can lose on this play. You can't lose any more than that. Now, once we adjust it and close out certain parts of the trade, then you have different profit goals. But again, the most you can ever lose on this without adding anything else to this play is the spread between these two. And that's it. There's not any more than you can possibly lose on this unless you start to try to hold a short position into next week. If you let this, if we end up not closing this out and it goes above 177.50. But again, in that situation, I think it's better if you ask me on what you want to do. But for the most part, if this thing is trading above 177.50 on Friday, we just close out the entire spread and take whatever the difference is between the two. You don't want to hold that into next week. If it's below 177.50, then you have the decision of whether you want to hold the call into next week and take it as a long play, which is ultimately the objective as far as I see it on this play. That is pretty much it for today. Again, if you guys have any questions, feel free to contact me across any of the avenues that I discussed earlier. And other than that, have a good rest of today, and we will see each other again tomorrow during the Wednesday webinar.